matrix requires you for 10 marks there, yeah. Can you see the group work now on the screen?
Yes.
Or you already have this question before?
No, madam.
Alright, okay, let's try to do this, yeah. I know that we do have the tutorial question also, but because I think that this example or this question is a comprehensive one, so if you're able to do this question, then you should be able to do the other question as well, yeah. All right, let's try to do this. IKHLAS is a company developing properties around the city of Kuala Lumpur. The company commenced the business in January 2010. All the plant asset acquired in 2010 when the business started. So it means that they already have the assets earlier, yeah. And during the current year 2014, IKHLAS recorded the following transactions. All right, January 1st, the following balances were available from the financial statement on all motor vehicle at their cost price. We have van of 70,000, you have truck A 100,000 and truck B 45,000. On January 15, IKHLAS bought a new equipment with an invoice price of 45,000, right? So this one is a new equipment. Let me have a highlighter so that it's easier for you to follow. Right, you have a new equipment and the cost price is 45,000. The company also had the following expenses associated with the purchasing of the equipment. So you have to decide whether you have to include the delivery charges, which include transit insurance, installation costs, and the maintenance for the first year. IKHLAS sold an old truck. So now you have sold old truck, which is the truck A or truck B. For 20,000, the truck was purchased in 2010 for 45,000. So which truck are you referring to? Was 45,000. Truck A or truck B?
Truck B.
Truck B. So you have a disposal of this truck later, yeah? And you sold that for 20,000. So what you have to do upon disposal, you have to look at the accumulated depreciation, all right, and then see how much you receive, 20,000, and whether there's a gain or loss on the disposal. All right, IKHLAS traded in motor vehicle. So what do you mean by trade in is that you buy a motor vehicle. All right, in this case, you trade in your motor vehicle. So which motor vehicle are you referring to? It must be the truck A lah. All right, is it? It's motor vehicle. That is the only one. Is it the one van? For a new van, the old van. So it must be the old van, yeah. So that cost you 70,000. The new van list price is 80,000. You accepted a trade-in allowance of 10,000 for the old van, paying 2,000 down in cash and issuing a note payable for the balance owed. Yeah, so the list price is 80,000, and then you have a trade-in. So trade-in means that you have old motor vehicle and then you sell the motor vehicle and you get some cash from it, right? And then you get a new motor vehicle. So the difference between the cash received will be topped with in this case, topped with cash, and the balance is in note payable. All right, and then you trade in for 10,000. So trade in instead of you receive cash of 10,000, all right. For example, in this case, the van costs you 80,000. All right, so you trade in your motor vehicle, your old van, and that old van values 10,000. So it means that from 80,000 now you only have to pay 70,000. From that 70,000, you pay out cash 2,000. So how much is the balance? The balance should be 68,000 in the form of note payable. So you have to understand the scenario here. You have to do the disposal of the old van, and you also have to open out a new account for the new van. And the new van, the cost is 80,000. Yeah. And November 18, IKHLAS exchanged or used office equipment and paid 35,000 cash for a new equipment. So in this case, you pay out cash. The old equipment cost you 40,000, accumulated depreciation of 30,000, and a fair value of 4,000. So what do you mean by fair value? It's just like, what is your net 40, 30? What is a fair value? I I think that the market value, yeah, means that you can sell it for 4,000 and paid 35,000. The old equipment 40,000, accumulated 30,000, fair value is 4,000. All right, okay. So, and the accountant adopted a full year depreciation, yeah, full year depreciation, asset purchased during the year and none in the year of disposal. So what it means by none in the year of disposal is that if you dispose of in the year, in this case, year 2014, so there will be no depreciation to be given on that asset in the year of disposal. So you don't have to complete the depreciation in the year. Asset given, asset you have motor vehicle and equipment, the residual value is 3,000, useful life is 5,000. Depreciation method is straight line and equipment is 20% reducing balance. All right. So the first question is, what amount should IKHLAS record on the books for new equipment? All right. Where's the new equipment? Yeah, this one is the new equipment. So you have to decide that you know that the invoice price is 45,000. And then you have a delivery charges, but including in the delivery charges is transit insurance of 500. So whether this 500 is inclusive or not, you know that installation is included, but the maintenance is not. Yeah. So what would be your what is the cost to be recorded for the new equipment? Anyone? You know that it should be 45,000 and plus 700, but you do not know whether this 500 ringgit will be included or not. Yeah, definitely maintenance is not. Let me check. Right. So the answer is that the delivery charges, including transit insurance, the transit insurance is part of the delivery charges. All right. So because of that, all right, this amount is included in the cost of the new equipment. So you have that 45,000 plus 1,500 plus 700. So the total cost is 47,200. So here, all right, they give you the scheme as well. So that's how we actually mark your answer. All right, you have 4 ticks and then divide by 2. So that's how you get 2 marks. All right. And then record the journal entries. So let's record the journal entries. Let me block first. Okay. The journal entries, number 1, January 1. So there's no journal entries for your January 1st because this is the opening balance of your assets. So you have van of 70,000, truck 100,000 and another truck B for 45,000. And how are you going to record your January 15? So January 15 is the new equipment. So you can name the account as a new equipment. So it's an asset. There's an increase in asset. So you debit your new equipment. How much is the cost? How much did the cost just now?
47,200.
Yes, 47,200. So you have shown the cost initially in the first part, yeah. So you have that new equipment 47,200. How did you pay? Bought a new equipment with an invoice price. It means that this one, it could be a cash. It doesn't mention that you will be paid in the future, means that you have paid cash. So I would suggest that you will have your debit your equipment and credit your cash. And how much is it? 47,200. Yeah, debit your equipment because this is your asset. Credit your cash because you have to pay out cash. Cash decreases, so that's why you credit. So is that clear? All right. Now we have June 30th. IKHLAS sold an old truck to Taufik Associate for 20,000. The truck was purchased in 2010 for 45,000. So when you have a depreciation, disposal, then you have to look at, all right, if I were to have truck that I sold, all right, so I'm going to credit my truck account because there's a decrease in the truck. So I'm going to credit my truck for 45,000. All right, and I received cash of 20,000, so there's a debit to cash. And then what will be my accumulated depreciation for the asset? So when did you purchase the asset? Was purchased in 2010, now is 2014. So how many years of depreciation that you have to compute? You purchased in 2010. Now is 2014, and 2014 is the year of disposal. So how are you going to compute that depreciation? For this one is an old truck, motor vehicle, residual value is 3,000, useful life is 5,000, using a straight line basis. Can you compute the depreciation per year?
Okay.
How are you going to do that? 45,000 minus 3,000, because that is the residual value. 45,000 is the cost, 45,000 minus 3,000 over 5 years. So how much is the depreciation per year?
8,400.
Divide by 5, 8, 4, what did I get? So weird. 45,000 minus 3,000 divide by 5. 8,400 per year. Is it? So 8,400 depreciation per year. So how many years that you have to depreciate? You purchase in 2010, 2011, 2012, and 2013, isn't it? So there are 4 years here. Why you don't compute for 2014? Because 2014 is the year of disposal. So again, you have 2010, that the year that you purchase, 2010, 2011, 2012, and 2013. There are 4 years here. So 8,400 times by 4, that would be 33,600. Can you tell me what do you call that 33,600?
Accumulated depreciation.
Yeah, that is the accumulated depreciation. What is the nature of accumulated depreciation? Debit or credit?
Credit.
Credit. Yeah, it's a contra asset. So when there's a disposal, all right, you're going to close the account. Are you going to debit the account or credit the account?
Debit.
Debit the account. How much? 33,600. Just now you have truck, you're going to credit the account because you are closing the truck account. And now you have accumulated depreciation. You are going to debit accumulated depreciation 45,000 because you are going to close the accumulated depreciation. And then you also receive cash for 20,000. So cash is debit. So what will be here, then you see that you will have a few accounts, right? You are going to debit your accumulated depreciation. But why 41,600? Oh, macam mana macam ni lah. Ada lagi ke? Alright, motor vehicle you're going to credit, correct? And then this one, how do you get that 41,600? Anyone? 45,000 minus 3,000 over 5 years times 4, isn't it? 8,400 times 4. It should be 33,600, right? Do you get the same answer as me or you get 41,600?
Same with you.
Okay, kan? Divide by 5 times by 4. So can we have 33,600 here? Right, 33,600. So when you have that, so you leave it here open first. Right, so you have on the debit side, how much is 33? So you have debit side, you have 53,600. And then you know that in this side you have 45,000. So you know that what should be is on minus this one. All right, so that's how you get the gain on your disposal, is the balancing figure. All right, how do you know that on the 8,600 is a gain? Because it is on the credit side. So when it is on the credit side, you know that is the revenue. Yeah, revenue. So that's why it's on the credit side, and that revenue we call it as a gain on your disposal. Okay. So we put it like that. Okay, how you compute that 32,600. So far so good. So you must know the how to record the disposal on the asset. All right, number one is that, so this is number one, right? Credit the asset account, the cost of the asset, debit your accumulated depreciation, right? And then you debit your cash because you receive cash, and look at the differences, and the differences is whether it's a gain or loss. Yeah, so that's how you do your journal entries for a disposal. Anyone not clear about this? Shadila,
Yes, madam.
are you okay?
Okay, madam.
All right. Okay, next we look into the next one is that June 30th done, September 1st. IKHLAS traded in its motor vehicle for a new van. The old van cost RM 70,000. The new van list price was 80,000. IKHLAS accepted a trade-in allowance of 10,000 for the old van, paying 2,000 down in cash, issue a note payable for the balance owed. So you must understand that there are two vans here. One is the old van and the other one is the new van. On the old van, you have to record the disposal, and the new van, you have to report on the acquisition. Yeah, so there are two types of journal entries here. So what would you do now is that what would be the accumulated depreciation? Let's compute the accumulated depreciation of the old van. The old van 80,000, so minus residual of 3,000. So 80,000 minus 3,000, and how long is it going to be? Oh, for 5 years. Yeah, 80,000 minus 3,000 over 5 years. How much do you
Madam.
get the depreciation per year?
Madam, the old van 70,000.
Manu, okay, sorry. Thank you. Right, 80,000 is the new van. The old van is 70,000. So 70,000 minus 3,000 residual value. Next, divide by 5 years. So you should get 13,400 per year. You
Yes.
got that? All right. And then when did you purchase this? Van. I believe it's 2010. All plant assets were acquired in 2010. So it means that it's for 4 years. Times by 4. So you should get, what is the accumulated depreciation?
53,600.
Very good. 53,600. How do you get that 53,600? 70,000, right? This is the 70,000 is the cost minus 3,000 residual value. We got 67,000. Divide by 5 years. All right. And then times by 4 years. Why 4 years? Because you acquired the van in 2010, 2011, 2012, and 2013. No disposal in the year of, no depreciation in the year of disposal. So that's why it's only 4 years. So you times by 4, that's how you get 53,600, right? So now you know that the old van, you are going to credit 70,000. Accumulated depreciation debit 53,600. And then do you receive any cash? You receive no cash, but you have a trade-in allowance. So trade-in allowance, you are going to debit. Yeah, debit trade-in allowance 10,000. And you pay cash 2,000 credit, and the balance you're going to pay that in a note payable. All right. So how are you going to do this? In a journal entries, right? I believe that there are a lot of entries there. Right? For the old van, remember? All right, let's see. We have that motor vehicle, we're going to credit 70,000. Accumulated depreciation, we are going to debit that 53,600. What else? You have paid. You pay 2,000 for the new van, and the balance. All right. How do you get the balance here? Remember that the new van is 80,000. All right. New van, and then you pay cash minus 2,000. Right. So that's how. And then you have the trade in. Trade in value is minus 10,000. Right. So that's how you get the note payable. So the balance 68,000 is in the form of note payable. Yeah, so that's how you decide how much is the balance, because you have to take into account the cost is 80,000, the new van, and then you paid 2,000 cash and the trade-in value is 10,000. Right, trade-in value is trade-in value is 10,000, and then the balance will be paid in note payable. So that's how you get note payable of 68,000, credit your cash. Okay. Right, let's see on the motor vehicle, you're going to debit your new motor vehicle, debit 80,000. Right. But then, all right, then only before that, all right, let me delete this first. All right, let's see that, okay, on this side, you have, what do you have on this side? You have 133,600, and on this side you have 140. Right, so when you see that there's a 140 and 133,600, so you know that you have to add in this value. Right, so what is the value here? The value is what you have, 140 minus the different sum of, right, that's how you get 6,400. Okay. Okay, anyone not clear about this? How you have a disposal and a trade-in value? Another way of doing this is, there's another way. Do you learn another way of doing this journal entries? Let me show you another way of doing this. Command C. Right. So we is that we do not want to have that. Okay. Instead of having the new motor vehicle here, I will keep it here differently. And how? Okay. Right. And then how do I pay the motor vehicle is through command V, and apa I trade in tu kat mana debit trade in? Mana dia? Apa tak ada? Hold on ya. Tak boleh lah, kenapa I tak ada control Z lah? Okay, never mind lah. I don't want to confuse pula. Okay. Okay, we take it as it is now. You put in the new motor vehicle 80,000 here, and then you do not record the trade-in value, is it? Oh, never mind. We leave it as it is first. Yeah. Okay. Next is, where is it? Right. And then we have IKHLAS exchanged a used office equipment and paid 35,000 cash for new equipment. So this is an equipment. The old equipment was cost 40,000, had accumulated depreciation of 30,000 and a fair value of 4,000. Mana dia? Where is it actually? Right, just now that's how you compute the depreciation. Okay, for the equipment, all right, you're already given the accumulated depreciation of 30,000, so you don't have to compute that. So you're going to credit, all right, the old equipment 40,000. You're going to debit accumulated depreciation 30,000, and for the new equipment, you exchange the fair value of 4,000. So means that that is a trade-in value lah. Yeah. So what they do is that how you're going to record this in the journal. So you're going to debit your accumulated depreciation, which is the 30,000 given. All right. And then you have new equipment, which is the 35,000 debit. And then credit your cash, credit your equipment, the old equipment, 40,000. Where is the cash? You paid 35,000 cash for the new equipment. So you pay out cash. And from there, you see that how you get the disposal, right? So similarly, disposal is always the gain or loss is always is always the balancing figure. So for example, here you have a sum of 65,000, right? On this side, you have 75,000. So you have the difference between debit and credit here is 10,000. So that's how you put in the 10,000 is on this side. So when it's on this side is a loss on disposal. Yeah. So that's how you decide whether it's a gain or loss. It is always the balancing figure, right? Okay. Now, are you clear about this?
Madam, the fair value does not affect anything.
That's why I was thinking is about in this example also the trade-in value is not taken into account, right? The fair value, what is a fair value? It means that it's like okay, remember that the how much you actually paid for the new equipment? You paid new equipment 35,000, right? Sorry, you paid 35. What's the value of the old equipment 40,000 accumulation and the fair value of 40,000? That's why okay, that's why I'm trying to show you. Okay, if I were to record this, actually command C, I will record it like this. I will record it the new equipment, command S, I will put it new, right? And then I pay that for, I will put it like that, you see? And then what is this 40,000? Right? And then that's how I get the disposal. So this is how you actually, right? You have equipment 40,000 and then accumulated depreciation of 30,000. You don't actually receive anything for that. Exchange a used office equipment and paid 35,000 cash for a new equipment. The old equipment cost 40,000 and had accumulated depreciation. That's why I was thinking how you actually put in the trade-in value here and the fair value here. Anyone can give some ideas on that? How do you do that? This one is loss on disposal. Because it's just the fair value, right? You don't pay anything. You pay for the new equipment, 35,000, you pay out 35,000. So it means that that is the cost of the new equipment. But the exchange, all right, I think that you just record that as the loss. It's like this. Yeah. So I think that this is enough for you to record. For me, I like it. To separate the transaction into two. One is the old equipment where I have the loss on the disposal loss on the disposal, and I have the new equipment that cost me 35,000. How I paid by cash. All right. I will always have it like that. Okay, rather than put everything together. Which one do you like? Which one do you normally do? First one or the second one?
Second.
Second one.
one.
Yeah. But how do you record the fair value? It's not recorded, is it? Because you can't record the fair value because it's just a value that is not does not affect your computation. Yeah. Because you don't actually pay for the fair value, you don't actually receive the fair value. But in this case, yeah, I think that we leave it as it is first. So if you were to record that, so it means that here you should also record it like we did just now, where you have two transactions. You have the new motor vehicle, 80,000. How you pay it? You pay it by cash, note payable, 70,000, and trade in value, the 10,000. Right? So trade in value to debit or credit. Right, never mind lah. Okay. What else do we have? 31st. What is the okay? So the journal entries for the above. Why is 31st December here? Oh, depreciation. So now you also have to compute the depreciation for the new asset. So what are the new asset that you have? You have truck, equipment, which is the cost is 45,000 plus you have the 47,200. And then you have new van, right? And then you also have a new equipment. So how you compute that? What is this? Motor vehicle, 19,400. Have you recorded the expenditure for the year? Prepare relevant journal entries only. Okay, now let's record why is it like this? I'm not sure. If I were, okay, let's do it together. Ni yang mana pula ni? Oh, ini yang I punya. Okay, for the first one is the depreciation for the new asset. But you have not computed depreciation. You are not required to do actually, but you have to record the transaction, right? What is the depreciation then? So let's list this one is disposed. Truck A, you still have truck A 100,000. You still have truck A, right? For the motor vehicle, which is the new equipment. Mana dia buat ni? Motor vehicle. Oh, I confuse. Let's make another color lah. What are the asset that we have? We bought a new equipment, right? That cost you 45,000. I will make a list here. Equipment, you have 45,000. right? And then, not 45,000. How much? 47,200, isn't it? And then you sold your truck, which is the truck B is no longer there. And then the truck purchased in 2010, and then you trade in motor vehicle for new van. So van is no longer there, but you buy a new van that costs you 80,000. Van 80,000. Right, and then office equipment, you have new office equipment that costs you 35,000. Equipment 35,000. Am I right? So how is the residual value? Is it residual value? Yeah. So this one is 0. This one is 3,000. This one is 0. So what you do? Straight line. Number of years. For equipment, number of years is 4 years. Motor vehicle is 5 years. So this one is 4 years, 5 years, and 4 years. So the depreciation per year would be per annum. Would be the cost minus residual value divided by number of years, right? Yes. Using the same formula. Salah. Equipment is, motor vehicle is straight line. This one is reducing balance, 20%. Common X. So how do you do that? Times by 20% je lah kan? Tapi kalau 20%, kenapa number of years is 4? So let's see how they do it. Equipment, they get it at 16,700. You have by 35,000 plus 47,200 times 20%. Oh, you just times 20% je. $16,440. So you should get the same. But this one is $15,400. Do you still have that 100,000? You still have truck A. Yeah, truck A, you still have that truck A. That costs you 100,000 and 3,000 and 5 years. Command C, command V. 19,400. Right, so these are the total. This is how you have to do the depreciation. Right, I think that because they are doing it according to the category, right? So, command X. So that's how you get total of the depreciation. Yeah, for this, and then you have total for your motor vehicle. Remember. Right, so 16,440 is because you have equipment, the new equipment. This one is the new equipment, right? And then this one is also the new equipment where the rate is 20%, right? So you're going to use that, the rate 20%. So total is 16,440. For truck A is a straight line basis. So the cost minus your residual expenditure over number of years, right? So you get the per annum, the cost per annum, the depreciation cost per annum. All right. Is that all? So you have 16,440 and 19. Kenapa kat sini 19 je? What about this one? Ah, 34,800. Okay. Okay, so 34. So means that here it should be 34,800. And here is also 34,800. Okay. I'm sorry that is a bit confusing because because I think that you have to show individually, all right, the computation so that you don't get confused. I'm sorry if I make you confused further, but yeah, that's my best. I think that's better to see it like that. Anyone have problem with this computation of your depreciation? Nazrul and Nazrul.
Yes, madam.
You okay?
I'm a bit
Lost.
yes.
Okay, you tell me. So that I think that some of you are also lost, but they don't know how to tell me. So you tell me why is it getting you are confused which part so that I can help you. Okay, the first part when you have the okay, let's look again. When you want to decide on the new equipment, is this a problem? The cost?
No, madam.
Okay, the double entries?
I think I understand that part.
It's just that for these, all right, this one is very straightforward lah because you don't have any trade in, right? So you always remember that you are going to debit your asset, debit your accumulated depreciation, credit your motor vehicle, and then how much you receive cash, and the difference is whether it's a gain or loss. So depends on the situation. But this one is a bit challenging. Why? Because you have a trade in. Yeah, the trade in value here, which is actually not represented, but it's actually from the loss on disposal. It takes into account there. Yeah, the trade in value. Where actually you get lost? Is it at the last part or earlier part?
At the last part, madam. How do?
Which one? This one? I made you confused.
Yes.
Okay, you like this presentation, or do you understand this better, or this one better? Number 1 or number 2?
I think I'm more used to number 1 because that's how I learned it before.
So how do you do it actually?
We minus the depreciation to get the value out, right?
Or are you saying that the loss or gain on disposal, is it?
Yes.
Oh, okay. So you do the first one. So you just immediately you have that 5 lines there.
Yes, madam.
Okay. But actually, at the end of the day, it's all the same. It's just that the presentation. But personally, I think that you should record your equipment a separate journal because that is the new equipment. So you have that the separate journal. All right. The first journal is on the disposal of the asset where you identified gain or loss on the disposal. And the second one is on the new asset.
So it's better to do it, to split it into the 2 parts.
It depends. It depends. For me, I like the second one because in terms of the presentation, because I want to see what is the gain or loss on the first asset. right? And the
I
second
see,
asset
madam.
actually shows you the new asset that you acquired, where and
Uh,
how you actually acquired the asset.
and because the first one only shows
Yeah,
all the assets as one
yeah, it
thing.
shows both the asset, the old asset and new asset. So to me, I would rather have the two separate journal entries.
Okay. Thank you,
Hmm.
madam.
All right. Saida, how are you doing? Is
Uh,
Saida here?
yes, madam.
How are you doing?
Madam, it's
Mm.
good.
Sorry?
Mm. It's okay, madam. All okay.
Okay, yeah.
Yeah.
Let's see Nurdiana.
Yes, madam.
Are you okay?
Yes, I'm okay.
Yeah. So
But
if those without background is okay. So I assume that those from foundation, yeah, you should do a lot better, yeah. Because this is just a revision to you. So now means that can we move on to the next question? Oh, contrast a capital expenditure. What is a capital expenditure? What is a revenue expenditure? Let's see the answer. Revenue expenditure is incurred in order to maintain normal operating condition. It does not increase productivity. It does not extend life beyond original estimate. But the capital expenditure, major overhaul or partial replacement, extends life beyond original estimate. Right? So you have 1.5 marks for your revenue expenditure and under 1.5 marks for capital. Right? So when you have this kind of question, do not leave it behind, yeah, because normally it's a what? It's a free marks. Okay? Okay, there's another question. I think that another question which is almost similar. I have actually put this in your classroom as well, right? Can we do this question?
yes, madam.
Okay. Kurnia Limited prepares account to 31st December each year. On January 2014, had the following balances on its long-term asset accounts. Building 2.2 million, motor vehicle 23200, equipment 86.400, building accumulated depreciation 660, motor vehicle accumulated depreciation 73,000, and equipment accumulated depreciation is for 54,000. Right? And then during the year, the following transaction took place. You purchase an office equipment. Right? Purchase an office equipment that cost you 9,600 and you also have installation cost of 800. So what would be the cost of the motor vehicle then? What is to be recorded?
10,400.
10,400. So you add together. So whenever you see installation, that will be part of the cost. Yeah. So the question asks you to do, what is this? Journal entries and then depreciation expense for the year. Discuss the general rule for deciding whether to capitalize or expense of asset. Okay. Okay, the second one is that you sold an office equipment in February for 3,200. It had originally been purchased in January 2010 for 6,008. Okay, because we are going to do the journal entries. Can we do journal entries for number 1? Let me see. I nak panggil nama. Najwa Marzuki.
Yes, madam.
What's the journal entries for number 1?
Credit, debit equipment,
All right.
credit cash.
How much?
Berapa?
Hmm.
10,000.
How do you get
400.
10,000? Okay, 10,400, right? So debit your office equipment or equipment and credit your cash of 10,400. The second one, sold an office equipment. You sold office equipment for 3,200. It cost you 6,800 in January 2010. Hold on, yeah. Let me check first. The company provide full year depreciation on fixed asset. and none in the year of disposal, you have to use this method, all right, for your, okay, now you have to compute the depreciation because you have to decide on the accumulated depreciation of the asset. Can you compute the accumulated depreciation for an office equipment that was purchased in 2010, now it's 2014. So 2010 means that 2010, 2011, 2012, 2013, 4 years only, yeah? Equipment is 25% per annum straight line basis. So if you have that, how much is the cost? The cost is 6,800, right? Times by 0.25, 25%, that is per year 1,700 times by 4 years. Is it 6,800? It's fully, yelah, 25% means that it's fully depreciated. So means that how much is the accumulated depreciation for the office equipment? Nordiana.
Yes, madam. Office equipment gonna be credited. No. So for that, if equipment credited,
I just want to know what is the accumulated depreciation first.
automatic distribution. 600,000
It's 25% per annum, straight line basis.
per annum. Wait, just a minute.
Cost is 6,800, 25% per annum for 4 years.
Lemak. Sekejap.
What is the accumulated depreciation value?
4 years
Yeah.
So 4 years. Minus by
Macam mana baik? The cost is 6,800 times by what's the rate? What's the
13.
rate? Diana?
Not sure.
Rate dia 25% per annum.
25.
So you
Yes.
times 6,008 times by 25%. Then you times by how many years?
4 year.
4 years. So times by 4. So how much you get?
Can you repeat it again for 35% per time
Per
by
annum. Times
annum?
6,800 times by 25%. That is the rate for per annum.
Yes.
So
Then
you have to time by 4 years because you hold the asset for 4 years. So what is the accumulated depreciation now?
what's it? Divide or time?
Times.
Times.
Times apa?
So,
Times by 4 years lah yang.
yes, by time by 4 years, but
You still,
what?
I know you are confused because you keep on getting 6,800, right?
Yes, but
Yeah. Why you get 6,800?
because it's time by
25% times by 4 years kan 100%.
yeah.
So it means that the asset, right, because the rate is 25% per annum, so bila 4 years, so it means that it's fully accumulated. So that's why you get accumulated depreciation of 6,800. You see that?
Yes.
So it means that now your accumulated depreciation is 6,800. The cost is also 6,800. So do you think that what you get? You get you sold the office, you sold the equipment for 3,200. So you have a debit of 3,200, isn't it?
3,200. Yeah.
Right, cash kan, because you sold the asset, so mean that you get cash of 3,200, so you debit your cash. So on the side, so you have debit, you have 68,000 plus 6,800 plus 3,200. On the credit side, you have 6,800. So you know that is it a gain or loss?
Loss.
Kenapa loss?
Because it decrease.
Hmm?
It's decrease.
Apa yang decrease?
Because decrease the depreciation.
No, it's not like that dia. Okay, let me see. Okay, let me show you ya. Alright. Oh, dia ni I tak ada jawapan dia yang ni. Okay, let's see. Okay, apa yang tadi? You are going to debit your accumulated depreciation. For your equipment. How much?
25%.
6,800 dia.
100.
Okay. And then you're going to credit your equipment. Yeah, so that is another 6,800. How much you receive cash? Debit cash. How much? 3,200.
200.
So now this is the only item that you have. So means that the balancing figure must be somewhere here. Right? And how much is it? It has to be 3,200. Why? Because here you have 6,008. Alright, and then you have here 6,008, 3,002. So kat sini mesti 3,002 lah juga. It has to be 3,002. So when you have this on the credit side, yeah, then you know that it's going to be gain on disposal. Okay, so that's how you do it. Command add, command. Right, so you're going to debit your accumulated depreciation 6,800. Credit your equipment 6,800. So that is to close the accounts. Then you receive cash on the disposal, you receive cash of 3,200. So because of that, you know that in this disposal, you have a gain of 3,200. In other words, you are saying that you are the asset of equipment. All right. The value, the net book value of the asset, how much is the net book value of the asset now? Anyone? What will be the net value? Zero, because why? It costs you 6,800 and you have actually accumulated depreciation of 6,800. So it's zero already, right? So net book value is zero. Cost minus accumulated, the net value is zero. But you can still sell the asset for 3,200. So that 3,200 that you get is actually a gain on the disposal of the office equipment, right? Okay, the second one is that, can we go on? Right? Okay, hold on. Tadi,
Madam,
yes. Yes?
the gain that we record just now tu we got from the cash kan?
Yeah. Cash tu debit, you receive cash. Kalau you tak ada benda ni, you don't have this, you punya balance tak sama. You won't have a balance on the debit side and the credit side. Right? You nampak? On the credit side, you ada berapa? You already 8,800. So how could you make it balance? You must have another entry to record the difference. So in this case, the difference is on the right side. The right side is the credit side lah. The credit side is actually your gain lah.
Alright.
Does that make sense?
Yes, madam.
So I just want to record just now kita ada debit. What do you buy just now? The first one? Office equipment. 9,000 seat installation cost is 800. Office equipment, and then you are going to credit your cash. How much is that? 10,400, and here is also 10,400. Okay, next is, what do you have? Purchase a new van for 83,000. So this one very straightforward. So what will be the entry? Shadila.
Debit motor vehicle and credit cash.
Very good. Debit motor vehicle and you're going to credit your cash. How much was it? 83,000. Is it? Van. Okay. So this one is 83,000. This one is 83,000. Very good. Next. Trade in motor vehicle. So bila you trade in motor vehicle, right, you purchase in 2008 for 48,000. So this is the trade in value. The list price of the new motor vehicle is 57,000, but Kurnia Trading only paid 45,000 as they received trade in allowance of 12,000 on the old motor vehicle. So what I would do now is that I have to compute what is the accumulated depreciation for the asset, right? For the motor vehicle, the accumulated depreciation is 20% declining balance method. So you have to do another computation first to decide what is the accumulated depreciation on that motor vehicle, right? What is the cost of the motor vehicle? Which been purchased in June for 48,000, June 2008. So let's do this. June, you purchase in 2008. The cost is, what's the cost? For 48,000. Declining method, which is 20%, 0.2. Right, so this is, I letak jauh sikit. Oi, jauhnya. Right, so this is the year, this is the cost, this is the rate, and this is the net book value, right? So this one is times by 9,006. This is not the cost. This is the net book value. Right, so what you have here, command C, command V. So you remember that you purchased in 2008, 2009, 2010. So this question is 2014, is it? 11, 20, 12, 23. Right, you dispose in the year of command C, command V. Okay, so this one will always be right. Salah lah. This is not the net book value. This is the depreciation. The net book value is actually this one minus this, right? Net book value. So here is actually take the net book value, right? And this one is I follow this. Okay. Berapa 49? 38. Oh. Alright. Kenapa net book value makin naik je ni? Is it? Initially, it was 48,000, means that at the end, net book value is 12,583. So this is the total depreciation. Okay. Okay, what I'm doing now? Anyone? Okay, who is? I do not know where I am now. Okay, for the motor vehicle, right? The motor vehicle, the depreciation method is using the reducing balance. Yeah. So how do I know? Because it's stated here that motor vehicle is 20% declining balance method. So how you want to compute the declining balance method? You have to get the cost of the asset. The cost of the asset you purchased in 2008 for 48,000. So in 2008 you have a 48,000 here. All right, and then the rate is 20%. Okay, the rate is 20%. So what you do is that you have to compute the depreciation based on the reducing balance. So the depreciation here for the first year is 9,006. The net book value is the 48,000 minus 9,006. You have 38,400. So this 38,400 will be the net book value for 2009, and you base on the 20%, this is the new depreciation for 2009, and that is the, all right, so this is the depreciation. But not the accumulated depreciation, yeah. If you want to compute the accumulated depreciation, is the total of this thing from year to year. But for the purpose of this question, you want to see what is the accumulated depreciation for two, right? Accumulated depreciation when you dispose, so that will be the 35,417. Okay, so where is it? You bought the motor. So that will be the accumulated depreciation, 35,417. So, and then you have a new motor vehicle. So how are you going to record this? Let me see, insert. What's the time now? All right, 3:12. Okay, so how going to record debit accumulated depreciation for your motor vehicle? How much is it? You are going to take that figure plus 35,417, right? And you know that you credit your motor vehicle. How much is the cost? The cost is 48,000. Yeah. And what do you receive? I want to record separately your new motor vehicle, right? The new one, and then how you pay by cash, I think. Right? What's the new motor vehicle? Trading only paid 40 as they receive trade-in allowance of 12,000 on the old motor vehicle. The new motor vehicle is 57,000. So record that 57,000 as the new motor vehicle, right? 57,000, and then you only paid out how much? You only paid 45,000 only, right? Why? Because you have a trade-in value. How much is trade-in value? Is the 12,000, the difference, yeah? And for that motor vehicle, right, I would put, what else we have here? Trade-in allowance 12,000. Okay, I would put it like this. Command C, I would put trade-in debit 12,000 here. I put trade-in value here. Right, then only I know whether there's a gain or loss on the disposal. Right, so this is actually plus okay, let me show you. So how to record this? If I have it here, right? I would have it like this. Okay, and this side will be 48,000. It means that I have to record plus of this 48,000 minus the debit side, which is kenapa ni? So what's the difference here? I would have 48,000 minus 47,417. Is that a loss of 583? Right, I would say debit on loss on disposal. Okay, okay. What it says here is that how it makes sense is that, all right, the old motor vehicle cost me 48,000, and the accumulated depreciation is 35,417. But I can sell my motor vehicle for 12,000. Not sell, in this case, I sell my old motor vehicle, but I don't get any cash. But the value of the old motor vehicle is 12,000 that I don't have to pay cash to the for the new motor vehicle. So that's what trade-in is. Yeah, so I would take that trade-in value as part of the disposal transaction. Because of that, all right, my loss on disposal is actually lower, which is only 583. Because why? Because I take into account the trade-in value. The difference is that instead of I receive 12,000 ringgit cash for my old motor vehicle, that 12,000 is used to reduce the cost of the new motor vehicle, the 12,000. Yeah. So that's why if I have the new motor vehicle, I have to record the cost at 57,000. Why? Because even though I only paid 45,000, but the different 12,000 is actually from the trade-in value of the old motor vehicle. So that's why I have to record this trade-in value into the transaction. Yeah, so that's why I would prefer it to be in this way so that it's clearer. Then you know that, okay, the cost of the new is 57. It's not 45,000, it's still 57,000. But it's just that I pay cash 45,000 for the new motor vehicle because the different 12,000 is from the trade-in value of the old motor vehicle. Right? I would like to stick my decision on how to record this like this. Right. Okay, for those who have background in accounting, all right, can you share with me how do you actually record this transaction if it's different from mine? Because if you don't have this trade in value, right, you close it, then you will have a loss on disposal, which is a lot more, isn't it? So let me try. If you use the command C, let me see. If you got it based on just now, right, you don't have this trade in value, but you have the new debit motor vehicle new. How much is it? Was 48,000. Right, I can take it 35,417. And then you do not know, credit this one, and then you also pay credit your cash of 45,000. Right, so if you look at the total on the side is, and this side is, so what is the difference? The difference is, I would say, plus this one minus this. Right, the difference is 9,583. So where do you get that 9,583? 48,000, 45,000. 35,417, new motor vehicle. Oh, sorry, this one is new, is 57,000. Sorry. Yeah. So see, you got loss on disposal is 583 also because the trade-in value is set off. Right? This one is debit 12,000. This one is credit 12,000. So you still get 583, which is loss on the disposal. Right? So loss on your disposal is 583. You get that? Okay. So now you have a balance of debit and credit. So, but again, it's the same. Means that your loss on disposal is still the same, 583. It's just that in my here, I show the debit, the trade-in value. And for the new motor vehicle, I also show the trade-in value because I have to show that the cost of motor vehicle is not 45,000, it's 57,000. Right? Do you get the difference between the first method and the second method? The answer is still the same. You have the loss on disposal of 583, but it's just that in terms of presentation, you can see clearer. It's more transparent. All right. Why is it that you have to pay less cash for the new motor vehicle? Okay. All right. Let me ask question. Alfine Dean. Are you here? Alpha Dean. Not here. Anis Uwais. Salah, Anis pula. Anas Uwais.
Yes, madam.
Okay. Which one did you learn in your foundation? First one or the second one? I mean on the left side or on the right side?
I think I use the right side.
The right side. All right. You don't have the trade-in value, is it?
Oh,
Okay. It's acceptable either way. Yeah. It's acceptable either way. So do not worry. Okay. So as long as you understand what you are doing, lah. Okay. All right. So let's see. The next one is that you have carried out major repairs to all equipment in November costing 16,000. This included a new motor costing 7,000, which increased the efficiency of the equipment by 200%. Major repair to some old equipment include a new motor costing. So now you have costing. So the repairs is 16,000. Included is 7,000. All right. So it means that now the old equipment, you are going to debit your old equipment 16,000 because this one increase the capital. This one is a capital expenditure. All right. Number 5 is that you're going to debit your number 5 debit of equipment. All right. This one is a major. Oh. All right. I just want to say it. And then you credit cash. And the value is 17,000. Is it 17,000? Oh, I see. It should be here after accumulated depreciation. This is actually working for your accumulated depreciation. Okay. Mana dia tadi? Solar building that cost 655 in December. Building was already purchased in 2004. Received cash 115,000 and 405,250 note receivable for the sale. All right, so it means that you dispose of your building. So you have to compute the accumulated depreciation for the building using 2% per annum straight line basis. And the building was purchased in 2004. So what you do is that you have to compute the 2004, the building, depreciation, accumulated depreciation for the building. What's the cost? Is 655,000 in 2004. 655,000 times 2%. How many years? Right, if you say that it's from 2004 and now you're doing for 2014, so up to 2013. So compute lah 2004, 2005, 6, 7, 8, 9, 10, 11, 12, 13. 10 years, right? So you times by 10 years. All right, 10 years. So how much is that? Right, so you're going to dispose, so debit accumulated depreciation, and then you're going to credit building that costs you 655,000. So how much is the accumulated depreciation? 655,000 times by 0.02 times by 10 years, right? So that would be the accumulated depreciation, 131,000, right? And then how much you cash? Receive 115 cash and not receivable. So you have debit cash, and then you're going to debit note. You're going to receive that later, all right? So how much is that you receive? You receive 115,405. 115,000. 405. I don't remember.
250.
250. 250. Right. So now you have to check whether is that a gain or loss on the disposal. So on the right side you have 611. On the right side, on the right here. So is it a gain or loss? Look at the credit side is bigger than the debit side. So the 3750 must be on the debit side, so it has to be loss. Insert, so it has to be on the debit side. If you have 3750, then only you have a balance of 655 on both sides. So you know that this one is a loss on disposal. Right? So loss on disposal of that. Okay? So that's how you do it. All right. The question asks you to journalize the entries. You have done that. And then determine the depreciation expense for the year. So you have to show lah, for whatever asset left. All right. Whatever asset, existing asset that you have not sold plus the new asset. So compute the depreciation based on the depreciation policy. Okay. You list down all the assets and then look at how you compute the how you compute it. Okay. This one is 3. Right, so it's already 3:27. I'm sorry for those who have class, you may leave the class now. And for those who do not have class, all right, we would like to do another question. I will have to make a record. I will stop recording now. All right, question on the disposal.